Normally, we have an impression that someone retired from a bank is highly comfortable, leading a happy life with nice pension, but that's not the truth. We'll have such kind of wrong perceptions because we do not know the facts. In this video, I will tell you how the bank retirees are cheated by the fraudulent practices employed by the bank managements and the government of India. So the story is not just about few thousands of people. There are a total of 6.91 lakh people who come under this bank pension scheme. The reason why I am using the word bank pension scheme is from 2010 onwards, the bank employees are deprived of the old pension scheme. Like the central and the state government employees, they come under a new scheme, which is obviously called by people like us as a no pension scheme. It is called as NPS, new pension scheme, but in reality it is a no pension scheme. So I am talking about the people who have joined the banks before 2010 and who have opted for the pension scheme prevailing at the time. So there are a total of 6.91 lakh people, and among them 3.78 lakh people have already retired, and they are already drawing the pension as per this pension scheme, and the remaining people are still in service and may retire in a couple of years. Out of the 3.78 lakh people who are drawing pension under this scheme, there are 1.20 lakh people who are actually drawing family pension. So their spouses expired and they are drawing only the family pension. So to understand the fraudulent pension scheme and how the lakhs of bank pensioners are cheated or exploited, we should understand when did this scheme start and what is the story of the pension in banks. So we know that there are pension schemes in governments, and those who have been appointed before 2004 have this pension work called the old pension scheme. In banks, the pension was introduced in 1995. Of course, in the Reserve Bank of India and the NABARD, the pension scheme was started a couple of years early. So from 1995, more or less 1995, several banks have started this pension scheme. But the pension has come into effect from 1986. So normally in the central and the state governments, the pension is also revised. We call it pension updation. Whenever the employees, existing service the people who are all now working, when their scales revise, pension will also be revised. So this happens with the central government, this happens with the state government. Why will the pension be revised? They are already retired. Why should their pension be revised? Because the concept of pension is, as the Supreme Court stated, is a deferred wage. So pension is nothing but a deferred wage. A part of something which has to be given as a wage is retained by the management, whether it is a bank or the government, and paid in the form of a pension for a post-retirement life of the employee. So this is the concept. So pension is a deferred wage. So therefore, whenever wages are updated, whenever wages are revised, pension is also revised. But unfortunately, the pension scheme which came into effect in 1986 did not get revised till 2019. So there was no revision at all in pension in any bank. So in 2019, the pension was revised and updated in Reserve Bank of India. In 2020, pension was revised and updated in NABARD. In the remaining banks, pension is not updated even now. Surprisingly, there were 4 revisions for existing bank employees, and now 2020 will witness the 5th revision. So even after revising the wages of the existing employees for 5 times, the pensioner's pension is not updated. So what is the result of that? So obviously pension is calculated based upon the last pay drawn. So the last few months of the pay an employee draws. So when someone retires, when their wages are relatively low, obviously their pension is also fixed at a very low level. So even now they get the same pension when it is not updated. To understand this concept, I'll give you a simple example. Today what is happening is, the earlier you retire, the lower the pension, and late you retire, better the pension. So to make it very simple, if somebody has retired as a general manager in 2002, and if you compare his or her pension with someone, with a clerk who retired in 2018, normally who should get the higher pension? Someone who worked as a general manager and retired should get a higher pension. But surprisingly, the person who retired in 2002 as a general manager gets a lower pension compared to a clerk who retired in 2018. This is precisely because between 2002 and 2018, wages were revised, and obviously when the wages revised and you retire at a later date, you will get a higher pension. So somebody who was retired 20 years ago is still getting a very meager pension, negligible pension. Is this not exploitation of the senior citizens of India? Is this not a fraud on the part of the managements in the government? Why should pensioners in banking sector be deprived of pension revision or pension updation? In fact, neither the government nor the bank management will be paying for if the bank pensioner's pension is updated. So I'll tell you even the mathematics also behind it. In reality, neither the management nor the government will incur even a single rupee of higher expenditure if they implement this, if they update the pension. Why will they not do it? So how is the pension fund created? So the pension is given in lieu of the bank's contribution to the provident fund. Suppose you are working in some organization, you will contribute to the provident fund and an equal amount will be contributed by the employer. So once you accept this pension, the employer's contribution to the provident fund will not be given to you, and that will be credited in the pension fund. So when the pension was introduced in mid-90s, many bank employees did not even opt for this pension. So subsequently in 2010, they were given a second time an option to go to this pension scheme, and many bank employees opted for this pension scheme in 2010. What was the cost incurred for the bank employee? They had to repay 156% of the bank contribution to their provident fund. So they have repaid 156% of their bank contribution to the provident fund, and then got into the new pension, got into this pension scheme. So now this pension fund accrual, the total money thus accrued to the pension fund is to the tune of 2,40,000 crores. And the interest from that is given as a pension to the bank employees. Hardly 8% is the annual pension commitment. So obviously the interest that comes is higher than the pension outgo. So what is the problem for the banks to update this pension? They are not going to give any single pie. So this pension fund is not created by the mercy of the bank. It is the right of the employees. The pension fund is created by the money which was supposed to be given to the bank employees when they were working. So obviously it is the money of the bank employees. So you are only paying from that. I'll give you an example. In 2013-14, the total interest on the pension fund was 8,557 crores. The total pension paid to all the pensioners was 7,235 crores. Look at how the interest earned on the pension fund was higher than the pension commitment. So in 2018, I'll give you the figure. So even in 2018, the total interest accrued was 18,400 crores. So the pension commitment was 14,800 crores. So in reality, there was a balance of 3,600 crore on the interest which was earned on the pension fund accrual. So obviously, you are not giving the money which is supposed to come to the employees, come to the pensioners. So there is no additional financial commitment if you update the pension. And giving these statistics to understand the point that neither the government nor the bank management will incur even a naya paise to update the pension. So what are the statistics? It is estimated that 20,000 crores every year is the annual requirement if the pension is updated, including the family pension update. So already the pension fund is getting an interest of 18,400 crores. So actual requirement, even if you update it, is 20,000 crores. So you can easily pay the higher pension to the bank employees. But why is this bank management not paying? Why the government is not acting? So is it not exploitation of the lakhs of senior citizens? I'll give you another piece of statistics also. The average age of a bank pensioner today is 75 years. What does it mean? Unfortunately, in another 10 to 15 or 20 years, most of these pensioners will leave this world. So obviously, after 20 years, even their families spouses will also leave this world. So what does it mean? It's an unfortunate fact, but it's a reality. Nobody can prevent that. So the fact is that the number of pensioners will automatically come down every year. So when the number of pensioners come down, obviously the pension commitment will further come down, because there was no recruitment between 1986 and 2010, and after 2010 this pension scheme is not applicable. So there will not be new addition to the pension scheme after a couple of years, because by the time everybody will retire, by the time all the employees appointed before 2010 retire, there will not be any addition to the number of pensioners. And already, as I told you, the average age is 75 years. So in the next 10 to 20 years, there will be a substantial reduction in the number of pensioners. And thereby, there will be a substantial reduction in the total pension commitment. So the interest will continue to accrue on the 2,40,000 crore National Pension Fund, the Bankers Pension Fund. In fact, that will further increase also, because some more people, more than, as I told you, still around 3 lakh, more than 3 lakh people are still working. They are already contributing to the pension fund. So the pension fund is already 2,40,000 crores by the March 31st, 2018, and this will further increase. So when the pension fund further increases, the interest accrual will increase. So you will be getting more interest and less payment commitment. So therefore, the bank pension fund can easily take care of all the updated commitments. But unfortunately, lakhs of bank retirees are cheated, exploited. In fact, they deserve to be punished. The bank managements and the governments deserve to be punished for cheating the bank retirees. As I told you, it is not the bank management money. It is the money which is withdrawn, which is withheld from the provident fund and credited to the pension fund. So why should bank retirees be deprived of updated pension? Why should the dependents of the bank retirees be deprived of the updated pension? Why should someone who worked and retired as a general manager 20 years ago should get a meager pension, much less pension than someone who retired as a clerk? Is this not a fraudulent practice? Is it not a blatant exploitation?